Good morning, everybody. I'm Christa Madrid, your realtor at Colorado Home Realty. Again, with my partner in crime, Brad Lyons at Independent Financial, and one of his partners in crime, Peggy Sage. Hi, Peggy.
Hi.
Good morning. Happy Friday, ladies.
Oh, yes.
Yay.
Happy Friday. And before we get going, I just want to share with our audience that Brad and Peggy have the patience of a saint. They adjusted their schedule to accommodate my needs. Thank you, guys.
This is what we do. We're all trying to get to be a saint someday, right?
That's right.
We all are a saint at certain moments, that's for sure.
In moments, yeah.
Yeah. Moments are better than never, right?
The more moments you can splice together, the better for everyone.
Yes, and there's always hope.
That's right. That's right. So Peggy, tell us what you do. What's your specialty? I know, but our audience doesn't. What's your specialty at Financial Bank?
Okay. What I basically was hired to do was the HECM loan, which is known across the country as the reverse mortgage. A lot of things that people don't know is that it's not only available for people that are looking to get equity out of their homes, but they also can pay having a mortgage payment for the rest of the time they live in the home. But there's also a HECM for purchase, which is growing. The need for it's growing exponentially in the country, just because it's an opportunity for people to put roughly 50% or maybe a little bit more, a little bit less down, and have the home of their dreams, but not ever have to worry about making a payment.
That's right.
So,
I am a huge fan of these reverse mortgages, also known as HECMs. I have a couple of properties on the market right now that I think would be amazing for the HECM market. So let's tell everybody how they work.
basically, it takes 4 pieces of information specific to each person, which is the dates of birth of that person, the value of the home, if they owe an outstanding mortgage, and the interest rates of the day, rates right now. And it calculates those backwards and figures out how many payments the youngest person could miss up until they're 100 years old.
Mm-hmm.
And that sounds really ominous and like a forever thing. But if you consider that someone in their early 60s could miss as many as 38 years of payments if they were purchasing or refinancing their home. And that's pretty amazing in this day and age, to be able to purchase or live in a home that you don't ever have to worry for as long as you live there if you ever have to make a payment.
I'm sorry, could you say that again? You could miss how many years of payments?
100 minus 62 is 38.
38
More than a 30-year mortgage.
38 years of payments that you don't have to make.
There you go.
Unbelievable.
How much fun is it to look at it that way?
That's pretty amazing. And I know that there's always the concern about what's the cost involved. But when you go, hey, I don't have to make payments for 30 years on this loan, then what the heck difference does it make? Oh my goodness.
That's right.
That's amazing.
That's right. Well, and one of the things too that's fun about this is that although all the calculations go to 100, which again seems like forever, but you also have the opportunity to stay in the home until the youngest person is 150. So there's a challenge for everyone.
150, 150?
150. They thought ahead when they did this loan program.
Well, I don't know if they see a trend in our age, but I remember going back to the biblical days, reading my Bible. I know that sometimes they were 200 and 300 years old. So we are living longer, that's for sure.
Well, once you get to 150, there is an eviction notice coming, or you'd have to refinance.
I can do a refinance for them at that point.
There you
Well,
go.
Peggy, tell us a little bit more.
You should have plenty of equity.
This is a guaranteed product,
right?
That's pretty awesome.
What's that, Brad?
This is a guaranteed product, right?
Yes, it's a government guaranteed loan, and so that means that there is FHA mortgage insurance involved. And that's kind of one of the sticklers sometimes for people, because that makes it a little bit more expensive. There's an upfront fee to set up that insurance policy. But FHA insurance is different for a HECM loan than mortgage insurance is for other loans. It guarantees many, many things and protects the consumer. And FHA, where it doesn't necessarily have so many protections built in for the lender, although there are a few of them, all the way across the board, that insurance policy is a protection vehicle for everyone that's involved in the loan.
That's awesome. So we have people, let's just put a scenario out there. We have some folks, all the kids, the last kid just graduated from college, she just gets engaged, she's moved in with her fiance. Now you're stuck in this big house that you no longer need, and with stairs, which you're finding to be a challenge lately. So you sell your home and you get an agent who says, oh, let's put you in touch with the lender. If the agent's not familiar with the reverse mortgage, it's going to be very easy to try to qualify or approve that person for a traditional mortgage. Now, at what point should a lender speak up to even mention the reverse mortgage?
Well, you just put a soapbox right in front of me, Christa, because I believe that every realtor and every lender has an obligation, because this is a government insured loan that actually protects a demographic that is a protected demographic, the senior population.
Mm-hmm.
And if somebody's looking at maybe spending $200,000 on a property, and a realtor or a lender doesn't bring up the reverse mortgage for them, they could be looking at a $200,000 property in an area that, or maybe doesn't even exist in some communities, versus a $400,000 to a $450,000, maybe even $500,000 property that better fits their needs
lifestyle.
and the lifestyle. And it's an opportunity for the realtors and lenders to be able to show people what they really can purchase. Once again, they don't have to make a payment, although because of the FHA mortgage insurance, they can make payments if they want, and continue to have access to those payments later on by setting them aside in a line of credit. So
Right.
it's just win-win-win all the way across the board for this product, and all realtors and lenders should understand it a little bit better than they do, I believe.
So here's one of my favorite scenarios. I get this over and over, where I have somebody who's nearing retirement or just retired, and they're saying, I don't know if I can afford this mortgage much longer. I'm going to be on a fixed income here shortly. I don't want to be tight. Let's sell my house. I always say, do you love your house? Because if you love it, let's keep you in your house. What do you mean? And I propose a reverse mortgage as a refinance option for them, so they don't have to move, so they can stay comfortable, and so they can have somewhere, they don't have to shake up their life, you know, that, because that's a lot of stress too. I don't care how old a person is, that's a lot to go through.
Very true, especially if maybe one or both of them are struggling, maybe with an adult onset of Alzheimer's or something that would very much disrupt one of the people by moving them out of their scenario.
Mm-hmm.
One of the other things that I think is really important to consider in that situation is that maybe that house needs some renovation to be able to accommodate them aging in place, and a reverse mortgage may open up the option to some financing to be able to do that they don't have to worry about taking out a loan for or repaying. And one of the things that I think a lot of maybe realtors and lenders don't understand is that any aging in place renovation that's done to a property opens it up in value to people for future sales, because our population is aging, and it does make a difference if some of those aging in place things are done.
Right, right. Nope, I completely get it. And I'm a huge fan, as you are well aware, having somebody refinance into a reverse mortgage for whatever their needs are, that doesn't benefit me as a realtor. But what we should be doing is putting our clients' needs ahead of our needs at all times. Yeah.
I so agree with that, and good for you. You are a saint.
I have my moments.
There you go.
Yeah, I think that right along those lines, we've got that obligation to present all of the solutions that
Yes.
are available to a client. And if there's a solution that's available to them, and just like if somebody qualifies for a 30-year loan, but they also qualify for a 15-year loan, I really should be showing that information so that they can make their own decision about what suits them the best. So you got to provide the knowledgeable counsel, and I think that the HECM solution is really just an incredible way for people to leverage their equity in their home, their hard work. They've been paying on this house for years, and they could stay in it, or they could buy another one. But Peggy, talk a little bit more about some of the ways that that HECM works. You can pay off debt with it. You can take a credit line with it. You could take cash out with it. You can not make payments. There's like several different components that you could just really bullet point for us.
Yeah, it really is an opportunity that the government has laid out and supports through their guarantees for people to convert the equity that they have in their homes to income in many, many different ways. You can actually prepay. There's no prepayment penalty on these loans any longer, where there used to be before the government got involved. And
Nice.
so you can still continue to make payments in, even if it's not required. And those payments, as I mentioned before, are set aside in a line of credit that actually grows at the same rate as the interest rate that you're being charged for the borrowed funds. So it's an opportunity for people to put money away for their retirement right into their home without having to count it as income. It doesn't affect Medicare, Social Security. There's even a workaround that the government has agreed to and understands for people who may be future Medicaid recipients for that line of credit not to be considered an asset.
Yep.
So they really have set it up for people to be able to use their homes in many different ways. Monthly income, you can take it out in lump sums. There's no questions asked about what you're going to use the funds for. It's just kind of one of those things that's a really well-kept secret for people to be able to convert their equity in the home and make their home a safety deposit box for their money, and be able to reach in without any kind of repercussions later. That your house is basically what pays it back, with no recourse back to yourself or to any of your children or heirs.
Right.
That's amazing. And what about credit qualifications? What if they've got a low FICO score?
Scoring doesn't affect the HECM loan at all. They do look at payment as far as if you've been late on mortgage payments and that type of thing. And you do have to qualify somewhat. It's called a financial assessment that's been in place for a few years. That came out of necessity because there were many people that maybe were over their heads as far as tax and insurance payments that they couldn't no longer afford, that type of thing. So the government does want to make sure that when a lender is looking at a HECM mortgage for someone, that they're going to be able to cover the maintenance costs of the home, or else that's a great opportunity for them to reach out to someone like Christa and move that home on into the market and get something that better fits their financial ability to keep those maintenance costs up.
Can I share a couple of things that I like about the reverse mortgage, the HECM?
Please.
So there was a time where you would hear the words reverse mortgage, and I still encounter this now where people are like, no reverse mortgage. And you're like, whoa, calm down, let's talk about this.
Right.
One of the things that I really love about this program is the protections put in place to protect these homeowners who can be vulnerable at times from predatory behavior, whether it's predatory on behalf of the banks loaning them the money, or predatory on behalf of the family and friends who think that grandma and grandpa or uncle and auntie are their ATM fundings.
Very, very true. You know, that's all part of what the FHA guarantees are, is the protections that have been put in place. I mentioned before that this is a non-recourse loan. It comes back only to the value of the property. But just in the event that maybe the property values have taken a dive for some reason, we've all lived through that once or twice in our careers. And if that happens to be the time that it's time for the home to go on the market or be sold, There's no recourse back to the heirs if the loan balance happens to be above what the value of the home is.
Right.
But they still have the option to go in and keep the home if it happens to be something that's a generational home. Grandpa and grandma owned it and one of the kids or grandchildren wants it. They still have first option with FHA and with the lender to be able to go in and bring that home back or keep that home in the family. There's also no prepayment penalties at all, and that didn't used to be the case.
Mm-hmm.
One of the other things that I think is very important as far as the guarantees for the reverse mortgage is that it guarantees that if you do make payments, you have access to those payments again. And there's no other loan product that's out there that offers the ability for people to reach back in and get all of the money that they have put in future payments after they have the loan in place, that they can use those funds later on for retirement or for emergency or for whatever reason.
Awesome.
So absolutely, I could go on for lots longer than we've got. So please feel free, anyone that happens to be watching this, to reach out to Brad or myself to find out a little bit more about this. I'm so excited that Independent Financial is giving me a chance to get the word out there locally about how important this product is for our senior population.
Absolutely. Now, one last question. Is this product available in all 50 states?
It is available in all 50 states. Independent Financial can't lend in one of them, and that's up in the Northeast, Massachusetts, I believe.
Sure.
Maryland. Is it Maryland?
Maryland. Yeah.
One of the M's in the Northeast. We can't lend in. Haven't had any opportunity to have to say no to anyone yet in Maryland, so I don't think it affects us a whole lot. Right. But it's available nationwide, and the rates are actually the same nationwide, but not fixed to regular FHA limits. The calculations go up to 675. I'm sorry, 765, and I'm not even dyslexic. They go up to 7 relations, but that doesn't mean that someone with $1 million house can't do them. And people that understand the value of this loan with $1 million properties do them all the time. So it's certainly something, and there's no loan limit as far as the low side, which in a lot of loan products can't afford to kind of do the loan because of lending restrictions for how much the closing costs might cost. With the reverse mortgage, I've done a $30,000 property in Nebraska before, and the lady actually was able to save her home and not lose it for a $13,000 home equity line that she had in place when she lost her husband. So some of the stories that are available for what these loans can do for people makes this loan product, in my opinion, the quote unquote saint of the industry.
Absolutely. The reason I asked that because I've run into some empty nesters who actually do sell their home here in Colorado and move to states where the cost of living is actually cheaper, and telling them that they can take this product with them to another state is amazing. Up until now, I didn't have a lender to refer them to in another state. I'd have to call around and find out, but now I know who to refer them to. This is awesome news. Thank you.
You're welcome. You know, one other thing, and like I said, you just trigger things that bring things to my mind. But one other thing that I would like to bring up is the funds that you get from a reverse mortgage are available for you to use for whatever reason you want. So if somebody was considering maybe a second home or doing something in a southern state, maybe a little bit more sun or by water, they take those funds out and use those funds to purchase a different house, as long as the home that we're doing the loan on is a principal residence. That's one of the things that's a requirement for the HECM, is that it be your principal residence.
Oh, that's
a great example for people to be able to move their money to a more usable purpose for them, maybe as a second home or motor home for travel or whatever. It can be up to a year out of your principal residence with a HECM year after year, as long as you maintain it as your principal residence and you're there at least one day out of a calendar year. That's a lot different than the old rules used to be.
Right. Well, you're putting a retirement plan in my head. The wheels are turning already.
It's already in mine.
Very nice. So throw out your phone number. We want to be able to have people jot down your phone number. I'll have it in the show notes, but if they're not the kind who read the show notes, we want to make sure that it's here in the video.
Okay, it is 970-691-4648.
Okay, guys, you heard it first. Peggy Sage at Independent Financial, specializing in HECM for purchase, and HECM for a whole lot of other reasons, whatever your needs
A heck
are.
of a lot of reasons.
That's a heck of a lot of reasons. I love
Yes.
it. Peggy, thank you so much for being our guest. We truly appreciate your time out with us on Friday afternoon, and hopefully we'll be sending some business over to you really soon.
Sounds great.
Thank
Looking forward to it. Thank you for your time too.
you.
Appreciate
Bet.
it.
Take care.
Bye-bye.